Alright, so this is going to be a recap on my gold short trade. So I wanted to recap exactly how this trade played out, the entire setup, why I took it, and then the countless mistakes that I made while trying to execute this trade. So I made about $3,000 on this trade, but I would say it was one of my most poorly executed trade I've taken probably this year. So I really wanted to make this video to show the amount of mistakes that were made, and so you guys can learn from that, and so I can learn from that myself as well. So to start out, we're going to outline this setup on the monthly time frame. So I have this tweet that I put out on October 11th. This is when I kind of started looking at the short. So gold and GLD was showing one of the biggest extensions in history. So ever since gold broke out of this base back in 2023, or actually let's say 2024 February, it's been on a non-stop run. And it rose almost over 100% from that breakout. So if we pull up the monthly time frame, it was extremely extended. We still hadn't even retested the 10-month SMA since 2023 end. So it's been a really long time. Now, as well as that, the monthly RSI at that time was in the 90s. At the time of watching this setup, it was around like 91 or 92. In this case right here, it was this is the weekly, never mind. But on the monthly, yeah, it was around 91, 92, and then the weekly as well at 82. The extension from the moving average that I just talked about. And you also start to see volume start to pour in on the weekly. So when I highlighted it was right here, I believe. October 11th, yes. So that after that week. So we saw volume start to absolutely pour in there. So that's where I originally started to watch the short. So usually you see volume pour into these names at the high, especially in a parabolic sense. So if we pull up something like SMCI, when this had its blow off top, you could see how the volume, it broke out on volume, and then the volume continued to pick up into the highs until it finally blew off. And on the daily, you can see it here, how it went, the volume just went parabolic as the stock went parabolic, and then led to a big mean reversion right there. So another comparison too I like to use for parabolic shorts is MicroStrategy, MSTR, from last year in November. Similarly to this thing also had the volume just ramp up into the climax. So it broke out of a base similarly, just like that. It broke out, makes a run, and as it starts to go into that parabolic phase, the volume picks up, and until it reaches the absolute top, you see the highest volume usually ever in that name. So on gold, what we saw was the week I started looking at it was the highest volume since 2022. So extremely notable right there, showing clear exhaustion signs, and as well as that into a major extension, as well as starting to form like an upper wick. So upper wicks tend to be extension signals as price moved up during the week and then ended the week on a lower end than where it was midweek. So an exhaustion sign. But obviously my mistake here was I was a little bit early. So now I'm going to show you guys why I ended up being early to this trade and what the mistake was in that sense and why I could have actually made a lot more money on this trade. So now going down the daily, I'm going to show you guys my entry tactics on how I entered this trade. So as we see here, my original eyes for this trade was actually right here, October 8th. I was watching it because we saw the volume pick up into the close on October 8th. And as well as we can see, obviously, this was the 5th consecutive gap up in a row on GLD into the daily RSI at 85. as well as an extension off the moving average. Hadn't touched the 20-day since like August. So my eyes were right here on that short. So what I ended up doing was I shorted the open right here. So I shorted GDX and I shorted gold via the instrument GLL, which is the double leveraged gold short ETF. I used Dust for the gold miners. So Dust is the 2x short on GDX. And I also entered GLD put options at the same time. So I ended up entering that trade right here on that gap up. And it did work and it faded. So what I ended up doing here was I closed half my position on this sell-off here. But then the problem what happened there was I didn't obey my stop, because what I was planning on doing was trailing the rest, try to let the rest of the trade play out with the amount of position I still had left. And if it closes above the highs, you just close the trade and just stop out, break even on whatever you have left. But what happened the next day was, that was the day we had the China tariff news, whatever. So gold gapped up, was a little bit strong. But then what happened over the weekend completely caught me off guard. 'Cause I thought going into that weekend, this is cool. I mean, nothing's going to happen. Gold probably topped. It was a dead cat bounce. Because similarly on the MSTR setup, what we saw was on the parabolic day, that day it went parabolic, at least the short day, fell 20% almost. The next day there was a dead cat bounce. So I thought it was possible that Friday would just be a dead cat bounce. Similarly how this dead cat bounce on Friday on lower volume, and then it just continues lower right after. So I thought gold would do the exact same thing. But turns out no. Ended up gapping up 2.5% overnight. That kind of screwed me over. But my mistake again after that was to not close the position. I started adding because I thought, okay, my room for error is, at least I don't think this can go that much higher. And the logical thing to do would actually be to add, because the risk to reward up here is so high. The risk of gold going even higher after it's already gone pretty much parabolic is pretty low. So I expected that it was going to work sooner than later. So I was adding size here. Now in hindsight, the way I should have operated here was I should have tried shorting during the day at the open and then covering at the close if it wasn't in profit. Or cover, and that's the mistake I made. I didn't do that, and I just kept adding intraday as it kept gapping higher and higher. And mind you, this was on I think the 10th up week in a row at this point. So I was getting mad that this was not trying to work. Similarly, GDX was also in a similar spot where the weekly just gone parabolic. I mean, I ended up making more money on probably the GLD short than on GDX short than what I made on the GLD short. And this thing, you can see, went absolutely insane. It went from 53 to the 80s in a straight line. Now back to GLD. So you can see I started feeling the risk to reward was getting better and better as it kept gapping up, hence why I was adding. But also this was eating at my account. This is causing an unrealized loss to grow. So now when we got to these highs, let's say like by the time we got to Thursday, I was like, this had to work. We were seeing at that time screenshots and videos on X or Twitter that people were lining up in countries like Australia, Vietnam, even like I think Indonesia too. People were lining up in lines outside of stores to buy gold bars and buy physical gold because they were just seeing the price go parabolic. So like this type of stuff happens at major tops where sentiment is just so skewed and everybody's trying to pile into something. It happens at obvious inflection points. So that gave me more conviction to the play. And then when we came to Friday, I added a lot of size here. Or Thursday into the close, and then Friday I added a lot of size. Because Thursday, what we saw was it kind of had a little blow-off run, a little bit like into extension in the close. And then what happened Friday was it fell hard. So then Friday, I didn't add any more size Friday, but I ended up making back almost all the loss that I. So mind you, my original entry was right here at this spot. Now, by the time we got here, I'm in a decent unrealized loss. Like I'm down like 6-7% on my GLL shares, and I'm down these pretty big on my dust. My options were also down a little bit. So then Friday, I thought this was the blow off. I thought this was gonna be, this is the final move. This was the sell off, and this would start that next leg down back to like probably the 20 SMA. But it didn't. I go into the weekend feeling good that nothing's gonna happen. Then Monday, this thing gaps up like 3.6%, and this is probably the biggest up day on gold I think since like 2000, since like 2020 or something. So it's like been a long time that something like that happened. So I was kind of shocked, but mine, I still didn't close my position. So because it felt like an exhaustion type move, and I really thought that the distribution was starting to add up. So we saw higher volume right here on this sell-off, distribution sign number 1, and then the highest volume we saw on GLD, I think ever. Well, the highest volume I think we've ever seen on GLD that next day, the Friday. That was a clear sign that I thought this blew off, but end up going higher. So mind you, at this point, I'm shocked. I mean, this trade like keeps looking better and better. But a way I like to operate when it comes to trading is I don't like to just stop out often. I mean, I prefer to stick with my conviction. If my conviction is through the roof, especially like when it comes to these parabolic trades where we're at an absolute insane side of the risk curve where your risk is pretty low. I mean, how much more is this chart realistically going to go? Is it going to just go in a straight? Because at this pace on the weekly chart, this was about to start going backwards. Like you were about to see this chart literally go backwards. Is there a likelihood that the chart goes like this? Probably not. More than likely it was either a pause. At least a pause will give you more time to think about it and possibly exit if you need to, or a pullback. So we ended up then the next day, and at this point I'm at the max size. I think I added more size today on that day, and the next day big gap down, gold falls like 6.5%, and I ended up making all the loss back on that trade, and I ended up making profits because on that same day GDX ended up falling like 10%. It just got destroyed, and there was blow off top signs. Then I covered the rest of it into the 20. I took half around this day into the close, I think around 370 something, and then I closed the rest into the 20 day. And then same thing on GDX. I covered the last of it on this gap down on that Wednesday, and I covered a decent amount right here when this level area got tested around the low 70s. But yeah, some now like lessons to take away from this is when you're trying to short something that's going parabolic, please be a little bit more picky. Don't keep adding and trying to. Obviously, this trade went well for me, and I ended up making like some money from it. But hindsight, I mean, there's just a million different ways I could have executed this trade better. Like even I could have even honestly gotten in, even if I missed, didn't even try. Let's say I could have attempted the short here as I did right here, covered a good amount at the bottom, and then gotten stopped, let's say taken a loss on the rest when I went here. I could have tried it again here, taking a tiny loss, tried it again here, taking a tiny loss, tried it again here, taking a tiny loss, gotten paid on this one, then I would have gotten stopped out of the rest here. I could have gotten back in on this day. Like, so you don't have to nail the exact top on these. It's more just like a stubborn thing. Like, let's see right here. If I got in on the break of this opening range lows on this day, this could have been a great trade. I mean, this thing fell another 2.6% intraday, and then it never would have touched my entry price again. I mean, it could have, would have fallen another 6.5% down to here if I just entered there. So that could have been an easy way to reduce overnight stress, because when you have huge size in a position like this and it's going completely against you, you get stressed overnight thinking like, what is happening? Even though you have confidence in the idea and you have crazy conviction with the trade, you still have doubts in your head sometimes and you still get stressed by it. The only reason I was able to stay in this trade and not give up on it and eventually make money from it was that my conviction was just through the roof. So another lesson in there, when your conviction is crazy, try and stick to it and follow that. Don't get shaken out of the trade. I mean, you have to manage risk obviously, but stick with it and don't give up on it just because, oh, it didn't work one time, didn't work the second time. This thing frustrated me for 2 weeks, frustrated me until it finally worked and paid me a little bit. So yeah, that probably wraps up the video. I tried to run you guys through the mistakes I made here and a full recap on this trade and how you could have even executed it even better than how I did. But yeah, this was a great opportunity for those who caught it. I know if you followed my Twitter, you definitely saw this idea. I spamming tweets, I think, about this. Not that, but yeah, I tweeted a lot about this. So yeah, if you enjoyed this video, make sure to like it. I think I'll post it on Twitter, X, probably post on YouTube too. If you see it on YouTube, make sure to subscribe and like the video. If you see it on X, like it and follow. And I'll see you guys in the next video.